The boardroom went silent the moment Victoria Hale, the white female CEO of a regional logistics company, slammed the folder onto the polished table in front of everyone like it was nothing more than trash. "This is who you brought into my company," she said sharply, her voice cutting through the glass-walled room as executives shifted uncomfortably in their chairs. A quiet bookkeeper? A few of them actually laughed. Not loud, but enough. Enough to make Michael Carter feel it. He didn't react. He just stood there, white American single dad, former corporate risk officer now reduced to a quiet bookkeeper role, hands relaxed at his sides, expression steady, almost unreadable. Beside him, his 12-year-old son Ethan held his school backpack and lunchbox tightly, standing too still for a child his age, watching everything without fully understanding why adults could be this cruel in front of him. CFO Richard Miles leaned forward with a smirk, tapping the projected financial report on the screen behind them. "We're talking about millions in exposure," he said smoothly, sliding responsibility away from himself like he always did. "Michael here just doesn't understand the scale." Another quiet laugh from the room. Victoria didn't even look at the missing signature authorization file sitting near the edge of the table yet, just a thin folder among dozens of others. But it was there, the one document Michael had flagged weeks ago. The one Richard insisted was unnecessary. The one Victoria approved without reading the final compliance line. Michael finally spoke, calm and controlled. "You should check page 12. The room paused. Victoria frowned slightly, irritated more than concerned. "Excuse me," she said. Michael didn't raise his voice. "Page 12 of the authorization file." A few executives rolled their eyes. Richard exhaled through his nose like it was a joke. "We don't have time for paperwork games," he said. That's when Michael stepped forward just half a step, placing the missing signature authorization file onto the center of the table. Not dramatic, not aggressive, just precise. The room shifted. Something about the silence changed shape. Ethan tightened, his grip on his backpack strap. Victoria finally looked down at the file. Her expression didn't change at first, just confusion. Then stillness. Then a flicker of something harder to hide. Richard's smirk faded as she opened it. Inside, the signature line was empty. Not missing by accident. Missing by rule. A compliance requirement that had never been completed. A banking condition tied directly to the loan they were celebrating. The room didn't know it yet, but they had just been standing on a crack in the system the entire time. Victoria turned another page slowly, her confidence thinning with every second. "This can't be right," she whispered, more to herself than anyone else. Michael didn't look at her. He looked at the file. "It's been right the whole time," he said quietly. And somewhere deep in the building, far from the boardroom, a phone started to ring that no one in that room was ready to answer. After the boardroom, nothing about Michael Carter's life changed in a dramatic way on the surface, and that was exactly what most people misunderstood about him. There was no celebration, no speech, no moment where the quiet bookkeeper turned former corporate risk officer stood taller because of what had happened in that glass room. Instead, there was a small apartment with a kitchen light that flickered slightly too often, a stack of unpaid bills on the counter that never seemed to shrink, and the steady rhythm of fatherhood that didn't pause just because a room full of executives had laughed at him. Every morning, he woke up before sunrise, not because he was disciplined in a heroic sense, but because rent didn't wait, groceries didn't wait, and Ethan's school schedule didn't wait. His 12-year-old son still moved through the world with a backpack that looked slightly too big for him and a lunchbox that Michael checked twice every morning without fail, even when he was tired. Ethan didn't ask many questions about what happened in the boardroom. He only noticed silence when Michael stayed up late reviewing records at the small kitchen table, sorting receipts, reconciling numbers, and keeping track of things that most people ignored until they became problems. That was where the missing signature authorization file lived now in this part of life. Not on a conference table, but inside a simple worn folder placed carefully beside grocery receipts and rent notices, as if it belonged there in the middle of ordinary survival. Michael never treated it like a trophy or a weapon. It was just information, the kind that either mattered or didn't until reality decided to test it. Some nights, he worked part-time bookkeeping tasks for small businesses that didn't care about his past title, only whether he could make their numbers make sense. The work was quiet, repetitive, almost invisible, but he didn't mind invisible work. Invisible work paid rent more reliably than pride ever did. On the kitchen counter, next to a half-empty coffee mug and Ethan's school permission slips, the missing signature authorization file would sometimes sit open for a moment, not because he was searching for revenge, but because he was confirming details the same way he always had, slowly, carefully, without assumption. One evening, while Ethan sat at the table doing homework, Michael returned from a grocery run with a plastic bag that barely covered what they needed for the week. The receipt was longer than the food itself. He placed it down, exhaled quietly, and adjusted the stack of papers already waiting for him. Ethan looked up and asked if everything at work was okay, not because he understood corporate banking, but because children notice patterns adults try to hide. Michael only nodded and told him to finish his math problems. That was how life continued, structured, contained, steady on the outside, even when pressure built underneath like a slow-moving current. Later that night, as the apartment grew quiet, Michael reviewed a notice from a financial institution requesting clarification on prior authorization entries tied to a missing compliance signature. The phrase sat on the page like it already knew it belonged to him. He didn't react immediately. He just placed the notice next to the missing signature authorization file, aligning them as if they were part of the same system finally revealing itself. Outside, a car passed through the parking lot, its headlights briefly cutting across the kitchen floor before disappearing again. Michael looked at the documents, then toward the small hallway where Ethan was sleeping, and for the first time that week, his expression tightened, not with fear, not with anger, but with recognition that something he thought was already resolved was still moving underneath the surface. His phone lit up on the table, one unknown number from a corporate line he hadn't seen in years, and as it began to ring again, he didn't reach for it immediately. Inside the glass-walled headquarters of Victoria Hale's regional logistics company, the world looked controlled from the outside, but every room now carried a different kind of tension that no presentation slide could hide. In the main boardroom, executives sat in sharper silence than usual, watching updated risk dashboards flicker across a screen that no longer matched the confidence of the last investor meeting. Victoria Hale, white female CEO, stood at the head of the table in a tailored business suit, her posture still firm, but her attention fractured between numbers, calls, and the uncomfortable reality that something in the company's financial structure was no longer behaving predictably. Across from her, CFO Richard Miles spoke too quickly, pointing at projections, defending assumptions, and trying to maintain control of a narrative that was beginning to slip. He had been the one who pushed the risky bank loan forward, framing it as expansion, as opportunity, as timing the market correctly. But now those same numbers were being revisited by analysts who were no longer convinced by confidence alone. In a separate glass meeting room, legal advisors reviewed compliance reports with quiet urgency, their language careful but heavy, referencing authorization gaps and unverified approval sequences, without fully naming what they feared might be missing. Somewhere between departments, between banking channels and internal audits, the phrase, missing signature authorization file, kept appearing in fragmented ways, never fully explained, always referenced like a problem that should not have survived this long without attention. In the investor room, conversations dropped mid-sentence when updated risk alerts arrived, forcing recalculations that erased earlier certainty about liquidity stability. Victoria watched all of it without reacting publicly, but inside the structure of her decisions, something was beginning to feel misaligned, as if an assumption she had built the company on was quietly being questioned by systems she no longer fully controlled. Richard insisted the issue was procedural, something fixable, something administrative that would disappear once documentation was cleaned up, but the legal team did not sound convinced, and that uncertainty spread faster than any official report. In the factory operations center, supervisors continued normal workflows, unaware that upstream financial friction was starting to slow approvals, delay shipments, and complicate vendor agreements that depended on timing more than explanation. Every department still functioned, but none of them were functioning in isolation anymore, and that interconnected pressure was beginning to converge toward the same unseen point. The missing signature authorization file was mentioned again in a compliance call, this time not as a detail, but as a potential trigger for bank review protocols, though no one in the room wanted to escalate the language further without confirmation. Victoria finally asked the question directly, Her voice calm, but sharpened by pressure she refused to show openly. Where exactly had the final authorization been validated? And why did the audit trail not resolve cleanly when traced back to the original approval chain? Richard answered too fast, too confidently, as if speed could substitute for certainty, but the hesitation from the compliance officer on the line lingered longer than his explanation. Outside the boardroom glass, the city moved normally, indifferent to internal instability, but inside, every new update felt like another small shift in balance that no one could fully stop yet. And as the next internal report began to load on the screen, the system paused for a moment longer than expected, highlighting one unresolved entry tied directly to the missing signature authorization file, leaving the room in a silence that no one immediately chose to break. The first time Michael Carter was truly misunderstood inside Victoria Hale's company, it didn't happen during a dramatic confrontation, but in a quiet operational review meeting where the stakes were hidden inside routine decisions that no one else thought twice about. He stood there as a white American single dad, former corporate risk officer, now working as a quiet bookkeeper, holding a printed reconciliation report in one hand, while the other hovered over a tablet showing automated financial outputs flagged by the company's AI system. The system had already marked the data as resolved, but Michael didn't accept that answer at face value, because the patterns beneath the numbers didn't align with the compliance structure he recognized from years in risk control. He didn't raise his voice. He didn't accuse anyone. He simply said the numbers didn't reconcile with the authorization chain, and that one missing approval line in the missing signature authorization file still hadn't been validated in the downstream banking sync. The room shifted slightly at that, not because it was dramatic, but because it slowed everything down. Victoria Hale, white female CEO of a regional logistics company, didn't like slowing down. She entered the room mid-report, already irritated by delays in the system dashboard, and immediately cut through the discussion with the authority of someone used to final decisions being unquestioned. "We already cleared this cycle," she said sharply, eyes fixed on the projected charts rather than on Michael himself, as if the issue was not a person but an inconvenience in the workflow. Michael calmly opened the file again, pointing not at opinion but at structure, highlighting a clause in the authorization sequence that the AI had normalized but not fully validated against the original banking requirement. He asked, carefully, whether the system had confirmed the missing signature authorization file against the external compliance ledger or only against internal replication data. That question landed differently. It wasn't defiance. It was correction. And in that moment, the room felt the discomfort of uncertainty replacing automation confidence. Victoria's expression tightened. She told him to stop questioning finalized datasets and to trust the system they had invested heavily in, emphasizing efficiency, scalability, and executive alignment. Michael didn't argue. He simply reached toward a secondary terminal and manually paused a downstream processing queue that was about to auto-release a batch of financial commitments tied to vendor payments, not out of rebellion, but because the missing signature authorization file still showed an unresolved approval gap that could cascade into covenant exposure if left unchecked. The system beeped softly as the workflow froze, and for a brief second, the room went still in a way that felt heavier than any raised voice. That was when Ethan, his 12-year-old son holding a school backpack and lunchbox, appeared at the edge of the office doorway waiting for him, eyes quietly scanning the tension without fully understanding the corporate language, but fully understanding the emotional weight. Michael noticed him immediately, and something in his posture softened, but he did not step away from the terminal yet, because stepping away would mean ignoring a risk he could clearly see. Victoria turned sharply, visibly frustrated now, interpreting his caution not as protection but as obstruction, and she ordered him to stand down from system access immediately, questioning whether his role as a bookkeeper gave him authority to interfere with operational flow. Richard Miles, CFO, who had been hovering near the back of the meeting, added fuel quietly, suggesting that Michael's behavior was introducing unnecessary friction into a streamlined financial process already approved at executive level. Michael responded only by showing the audit trace again, pointing to the unchanged gap in the missing signature authorization file, but Victoria cut him off mid-sentence, her voice firm and final, declaring that operational trust could not function if every junior role questioned executive clearance. Ethan shifted slightly in the doorway, tightening his grip on the backpack strap, sensing without words that his father was being reduced in front of others again, and that this kind of silence carried more weight than any argument. Michael said nothing for a moment, simply looking at the file, then at his son, then back at the system he was trying to protect from a risk no one else was willing to acknowledge yet. Victoria finally ended the exchange with a cold instruction that security would escort him out of system access review if he continued to delay operations, effectively placing his role under immediate removal consideration pending compliance evaluation, and the words hung in the air not as a threat of anger, but as a quiet administrative decision that had already begun moving forward. Michael Carter didn't react the way the room expected him to react, because by that point in his life, he had learned that reacting was often the fastest way to lose credibility in places that confused confidence with correctness. He stood slightly apart from the glass table in Victoria Hale's corporate environment, still officially a quiet bookkeeper, still visually unimportant compared to the executives who filled the room with tailored certainty. Yet his attention was locked onto something everyone else had already decided was irrelevant. The missing signature authorization file displayed across both the physical folder and the digital compliance interface. To everyone else, it was an administrative gap, a clerical inconvenience, something Richard Miles insisted would resolve itself once the bank aligned their internal validation layer. But Michael wasn't looking at the file the way they were. He was looking at it the way a former corporate risk officer looks at a system that has already started failing quietly beneath its own confidence. His eyes tracked not the absence of the signature itself, but the structure around it, the sequencing metadata, the internal routing stamp, the timestamp alignment between the approval request and the bank's covenant verification log. There, buried in what most people would never scroll far enough to notice, was a one-line discrepancy. The authorization request had been generated after the compliance lock window had already closed, yet the system had still allowed it to pass into a pending validated approval state. It was a contradiction that should not have existed unless something had bypassed a control layer, not dramatically, not loudly, but silently through a structural exception that reclassified the transaction rather than stopping it. Michael didn't speak immediately. He simply enlarged the section, isolating the exact line where the routing code failed to match the compliance registry's last verified checkpoint. And for a brief moment the screen revealed what looked like a harmless administrative delay, but to him it read like a structural breach disguised as normal processing. Around him, Victoria Hale continued speaking in firm, controlled sentences about operational efficiency and executive trust, her focus still aimed at restoring authority in the room rather than examining the file more deeply, while CFO Richard Miles added soft reassurances about how the bank always clears these edge case flags during end-of-cycle reconciliation. No one stopped to look at what Michael was seeing, because the system still appeared functional on the surface, and in corporate environments functionality was often mistaken for correctness. Ethan stood quietly near the doorway, his school backpack and lunchbox slightly lowered now as he watched his father's stillness with a kind of confused patience, sensing that the room was arguing around something it did not fully understand. Michael finally pointed, not dramatically, but precisely, to the mismatch between the authorization timestamp and the compliance lock window, explaining in a calm voice that the missing signature authorization file was not simply missing a signature. It was generated outside of its permissible authorization sequence, which meant the approval itself might have been structurally invalid before anyone even signed or refused to sign it. The sentence landed softly, almost too softly for the weight it carried, and for a fraction of a second, one of the junior analysts leaned in as if to verify what he meant, but Richard immediately dismissed it as overinterpretation of system latency, and Victoria, already under pressure from investor expectations, chose not to slow the meeting further for what she assumed was a technical overreach from a non-executive role. Michael didn't argue. He simply expanded one more hidden layer of the file, where a secondary audit signature field existed but had been auto-collapsed by the interface, revealing that the system had recorded a deferred compliance acknowledgement tied to a manual override request that no one in the room seemed to remember approving. That was the detail no one else was reacting to, the kind of detail that does not look like a problem until it becomes the only thing explaining everything else. Still, no one in the room acknowledged it beyond a passing glance, because acknowledgement would require stopping the momentum of decisions already in motion, and in that kind of environment, momentum was treated as truth even when evidence suggested otherwise. Michael lowered his hand slowly, not because he was finished, but because he understood something the others did not yet accept. Being right inside a system that refuses to slow down does not change the system's direction immediately. It only marks the point where consequences quietly begin to form. And as Victoria continued the meeting without addressing the anomaly directly, the missing signature authorization file remained open on the screen like a silent warning no one had officially agreed to read. The pressure inside Victoria Hale's regional logistics company didn't arrive all at once. It built itself layer by layer, like a system quietly approaching overload while everyone inside it insisted the numbers were still under control. Within 24 hours of Michael Carter pointing out the hidden discrepancy in the missing signature authorization file, the first escalation came from the bank, not as a dramatic freeze, but as a compliance hold placed on a subset of credit lines tied to the company's revolving loan structure, triggering immediate liquidity alerts across Treasury dashboards. CFO Richard Miles was the first to respond, and unlike everyone else in the room, he did not look surprised, because the structure of that loan, the timing of the approval, and the aggressive leverage he had pushed through earlier reviews meant that short-term volatility actually strengthened his position rather than weakened it, giving him justification to argue for emergency restructuring authority that expanded his control over financial operations. Victoria was pulled into an investor emergency call shortly after, where analysts questioned discrepancies in covenant validation tied to the same missing signature authorization file, asking whether internal approvals had been properly aligned with external banking requirements. And although she maintained composure, the tone of the conversation shifted from performance updates to risk containment. Meanwhile, automated systems flagged irregularities in payroll forecasting as liquidity buffers tightened, forcing HR and finance to simulate delayed salary cycles in certain departments, a scenario that immediately increased internal tension among mid-level managers who had never seen payroll flagged as conditional execution pending liquidity confirmation. At the same time, a logistics partner initiated a contract review after noticing shipment scheduling delays caused by internal approval friction, escalating concerns that could affect delivery guarantees, insurance coverage, and penalty clauses tied to missed deadlines. In the background, an internal AI-driven compliance monitor began generating contradictory outputs. One report stating the authorization chain was valid under system replication logic. Another warning that the missing signature authorization file contained unresolved manual override entries that had never been reconciled with banking audit logs. And these conflicting interpretations created enough uncertainty that the legal department quietly began drafting preemptive documentation in case external regulators requested full traceability. Richard Miles, however, used the confusion to his advantage, positioning himself as the only executive capable of stabilizing financial continuity, subtly shifting decision authority toward himself under the justification of crisis management, while privately reinforcing the narrative that Michael Carter's intervention had triggered unnecessary operational disruption. Victoria Hale, under pressure from both investors and internal departments, initially considered slowing approvals to allow a full audit of the compliance gap, but every hour of delay increased the visible strain on reporting systems, vendor confidence, and credit exposure metrics, and she began to interpret hesitation as a greater threat than the anomaly itself. The factory operations center reported delayed production scheduling due to uncertain funding confirmations, creating a cascading effect on downstream shipments that began to trigger penalty risk notifications from key clients, further tightening the perception that the system was entering instability. In executive discussions, Michael's earlier warning was reframed by some as an overreaction to system latency rather than a structural failure, even as the missing signature authorization file continued to appear across multiple audit layers without resolution. Finally, in a closed executive session surrounded by rising pressure from investors, banking representatives, and internal compliance officers, Victoria looked at the consolidated risk dashboard, saw the growing list of cascading alerts, and instead of slowing down to investigate further, she doubled down on executive authority, instructing the organization to proceed with operational continuity measures, override non-critical compliance delays, and prioritize financial stability through immediate execution rather than extended validation, effectively choosing control over uncertainty even as the system beneath her continued to tighten around the unresolved file that no one could fully agree on how to interpret. The decision to remove Michael Carter from the system didn't come with drama. It came with procedure, the kind of corporate language that makes irreversible actions sound temporary and reasonable at the same time. Inside Victoria Hale's regional logistics headquarters, the same boardroom where he had once been dismissed as just a quiet bookkeeper, the atmosphere had shifted from confusion to containment and now to resolution. Security arrived without urgency, only efficiency, as if escorting him out was simply the next scheduled step in a workflow that had already decided his outcome. Michael stood calmly as the notice was read aloud. Termination pending compliance review, immediate suspension of system access, and reassignment of all responsibilities related to financial documentation oversight. No one used the word fired directly at first, but Ethan heard enough. His 12-year-old son stood near the glass doorway holding his school backpack and lunchbox tightly, eyes fixed on the floor, then on his father, then on the executives who avoided looking at him. CFO Richard Miles didn't hide his satisfaction well enough. He framed the decision as necessary stabilization, quietly reinforcing the idea that Michael had introduced unverified disruption into a carefully calibrated financial structure. Victoria Hale maintained authority in her voice as she confirmed the removal, stating that operational integrity required decisive action when internal processes were challenged without executive clearance, and that the company could not function if every low-level role questioned system-level validation. Michael didn't argue. He didn't raise his voice. He simply looked at the room one last time, not with anger, but with the same calm observation he had used when first noticing the missing signature authorization file, as if confirming that people were choosing speed over understanding. Before turning away, he spoke one sentence, quiet enough that it didn't interrupt the procedural tone, but sharp enough that it lingered. If that file isn't corrected, it won't matter who signs what after this. No one responded immediately. A few executives interpreted it as frustration, others as posturing from someone losing access, and Richard even smiled faintly, dismissing it as irrelevant now that operational control had been reasserted. Ethan took a small step forward as security guided Michael toward the exit corridor, but Michael only gave him a brief nod, a controlled reassurance that did not match the weight of what was happening, but still held it together in silence. As they moved through the hallway, past glass offices and monitors displaying financial dashboards still marked with unresolved alerts tied to the same missing signature authorization file, Michael noticed something most people ignored. The system had stopped escalating new warnings, not because the issue was resolved, but because it had reached a temporary threshold where alerts paused before critical failure propagation. That detail stayed with him as he was escorted out of the building, not as comfort, but as confirmation that the process had entered a stable-looking phase that often preceded deeper breakdowns. Inside the boardroom, Victoria Hale resumed control of the meeting, instructing teams to normalize reporting metrics and proceed with business continuity protocols, while Richard Miles began quietly consolidating influence over the crisis response framework under the justification of financial stabilization. On the surface, operations resumed. Reports updated. Calls continued. Investors were reassured with carefully worded statements about temporary compliance review adjustments. Even the dashboards appeared calmer, as if the system itself had accepted the decision to remove the disruption. But beneath that false stability, the unresolved missing signature authorization file remained in the background of every synchronized ledger, every delayed audit line, and every conditional approval queue, quietly unchanged, still unvalidated, still structurally present in the system that everyone believed they had just brought back under control. The first signs that Michael Carter was right did not arrive as a single catastrophic event, but as a chain reaction of small failures that the company could no longer explain away with confidence. At Victoria Hale's regional logistics company, everything initially looked stable on the surface after his removal. dashboards returned to green indicators. Executive dashboards stopped flashing warnings, and Richard Miles even presented a revised liquidity narrative to investors that framed the earlier disruption as a contained compliance adjustment. But beneath that carefully controlled surface, the system had not actually stabilized. It had simply stopped escalating alerts while the unresolved structure inside the missing signature authorization file continued to propagate quietly through dependent systems. The first real breakdown appeared in accounts payable, when scheduled vendor payments failed to execute despite being marked as approved, triggering confusion in treasury operations and immediate calls to banking representatives who insisted no external freeze had been formally applied to all accounts. Only selective risk-linked exposures tied to unresolved authorization chains. Within hours, payroll processing began to fracture, with certain departments receiving full execution while others were flagged for pending validation reconciliation, creating internal panic among HR managers who had never seen compensation cycles split mid-processing. Victoria was pulled into an emergency investor briefing where she attempted to reassure stakeholders that the issue was technical latency within the compliance integration layer, but the language no longer held the same persuasive power it once did, because multiple investors had already received conflicting audit summaries referencing the same missing signature authorization file as an unresolved dependency in the approval structure. Meanwhile, Richard Miles pushed aggressively to centralize financial control under an emergency override protocol, arguing that decentralization of approval logic was what allowed the discrepancy to persist, and positioning himself as the only executive capable of restoring operational continuity through stricter validation authority, even as his earlier decisions were now being indirectly implicated by the emerging audit inconsistencies. Outside the executive layer, factory operations began experiencing delayed shipment releases as automated logistics scheduling systems failed to confirm payment clearance with upstream banking verification nodes, resulting in partial shutdowns that were initially described internally as temporary routing inefficiencies, but were quickly recognized by operations staff as systemic blockage in financial authorization flow. Legal teams, now fully engaged, began reviewing contractual exposure clauses tied to delayed fulfillment penalties and quietly escalated the situation into pre-litigation analysis after discovering that certain approval entries could not be traced back to a fully validated compliance signature chain. The most critical shift, however, did not come from executives or auditors, but from a junior compliance analyst in the back office who noticed something everyone else had overlooked in the fragmented system logs. The missing signature authorization file was not just absent. It was referenced as a required dependency in multiple downstream transaction approvals that had already been executed, meaning the system had been building obligations on top of an unresolved foundation without stopping execution at any checkpoint. When she flagged this to her supervisor, it was initially dismissed as a parsing error in the audit visualization tool, but she persisted, cross-referencing raw ledger entries with bank reconciliation logs until the contradiction became undeniable even to senior analysts who had been convinced the issue was contained. By the time her findings reached the executive floor, Victoria was already facing renewed pressure from banking partners requesting clarification on authorization integrity, and investor confidence had begun to fracture again as reports circulated showing that the earlier stabilization narrative did not align with actual transaction integrity status. Richard attempted to contain the situation by suggesting a system rollback and reclassification of the affected entries as non-critical legacy approvals, but the banking representatives pushed back, stating that once a compliance signature chain is structurally invalidated, downstream obligations cannot simply be reclassified without full audit reconciliation. The company, which only days earlier believed it had regained control, was now confronting a deeper structural issue that no dashboard could fully normalize. And as internal systems continued to reconcile themselves in loops of partial validation and unresolved dependencies, it became increasingly clear that the moment Michael Carter was escorted out did not close the problem. It only removed the last person who could clearly see it forming in real time. The moment the truth began to shift inside Victoria Hale's world did not come with a dramatic announcement, but with a quiet correction buried inside a revised audit packet that reached her desk during an emergency executive review. At first, it looked like another escalation report tied to the ongoing system instability, another layer of noise in a company already struggling to separate technical failure from structural failure. But then her eyes caught something that stopped her mid-sentence while she was speaking to legal counsel. The missing signature authorization file was no longer being treated as a minor compliance gap or a procedural delay. It had been escalated by external banking auditors to a category labeled structural approval invalidation risk, a phrase that carried weight far beyond internal corporate interpretation. Victoria frowned, leaning closer to the document as if proximity alone could change its meaning. And for the first time since the crisis began, she didn't immediately delegate interpretation to Richard Miles or dismiss it as technical ambiguity. Instead, she read the sequence line by line, noticing how the approval chain did not simply lack a signature, but referenced a conditional authorization state that should never have been activated without final compliance validation. Around her, the room continued moving in familiar executive rhythm. Analysts presenting mitigation options, legal advisors discussing exposure frameworks, but Victoria's attention had narrowed to a single structural inconsistency that now refused to stay in the background. Richard Miles, sensing the shift, attempted to redirect focus toward liquidity stabilization strategies, insisting that the issue was isolated and already contained within operational adjustments. But his confidence no longer carried the same weight it had days earlier when the system still appeared stable. A junior compliance officer, standing near the edge of the table, hesitantly raised a point that had been circulating quietly through back-end audit logs. Multiple downstream transactions were still referencing the missing signature authorization file as a required validation dependency, meaning the system was actively building financial obligations on an unresolved approval foundation. That statement changed the temperature in the room. Victoria did not interrupt this time. She simply asked for confirmation, and when the junior officer provided cross-referenced bank trace logs showing unresolved authorization markers embedded in executed financial cycles, the room fell into a deeper silence than any executive disagreement had produced so far. For the first time, Victoria considered the possibility that the issue was not procedural delay or system latency, but a fundamental oversight in how the approval chain had been constructed and trusted. Her mind returned, unwillingly, to the moment Michael Carter had pointed to the file, to his calm warning that the structure itself was invalid before anyone even tried to fix its outcomes, and the memory now felt less like resistance and more like missed comprehension. Richard Miles tried once more to assert control over the narrative, suggesting emergency override protocols and internal reclassification of affected entries. But even legal counsel hesitated before endorsing that approach, noting that external banking systems were already flagging the same unresolved dependency as a violation of approval integrity standards. It was at that moment, in the middle of overlapping voices and fractured authority, that someone in the room, no longer certain who first said it aloud, suggested that the only way forward might require bringing Michael Carter back into the process, not as a gesture of reversal, but because the system's original structural validation might depend on the very person they had removed. Victoria didn't respond immediately. She just looked at the screen again, where the missing signature authorization file sat unresolved in multiple layers of the audit interface. And for the first time, the certainty she had carried through every decision began to feel slightly out of alignment with the system still quietly waiting for correction. And as another notification appeared on the compliance dashboard indicating a new bank inquiry requesting immediate clarification on authorization legitimacy, the room realized no one was fully in control of what would happen next. The crisis finally broke into the open the way financial systems always do when internal containment fails, through external pressure that can no longer be negotiated in private. Victoria Hale's regional logistics company was now facing a coordinated escalation. Emergency bank restrictions had expanded from selective liquidity holds into broader transactional freezes tied to unresolved compliance validation, forcing vendors, payroll systems, and shipping partners into simultaneous uncertainty. What had once been an internal discrepancy centered on the missing signature authorization file had now become a publicly referenced risk event in investor communications, with analysts live streaming Q&A sessions where questions about structural approval integrity replaced earlier discussions of growth projections. The board convened an emergency session, and for the first time, the language inside the room stopped sounding like management and started sounding like damage control. Legal counsel warned that if the approval chain could not be validated quickly, the company could face formal ownership disputes over executed contracts that may have been processed under invalid authorization conditions, triggering potential litigation across multiple jurisdictions. CFO Richard Miles attempted to maintain composure by presenting a revised continuity plan that relied on emergency banking cooperation and internal override justification. But every new update from Treasury systems undercut his confidence. Payroll batches were failing in staggered sequences, with some employees paid and others left pending validation, creating immediate operational instability and internal unrest. Factory operations began issuing partial shutdown notices as shipping authorization delays triggered cascading penalties from logistics partners, and within hours, several key clients initiated contract suspension reviews, citing uncertainty in fulfillment guarantees tied to financial clearance status. The situation escalated further when banking representatives formally requested confirmation of the missing signature authorization files. Legitimacy, stating that without a validated compliance signature chain, they could not guarantee settlement continuity on any linked accounts, effectively placing the company in a controlled financial hold. Investors, now watching the situation unfold through real-time updates and fragmented disclosures, began questioning whether prior earnings reports had been based on structurally incomplete authorization frameworks, pushing the company closer to a reputational collapse that no internal mitigation strategy could fully contain. Victoria, seated at the head of the emergency board table, finally acknowledged what had been building beneath every report, every escalation, every dismissed warning. The system was not merely unstable. It had been operating on an unresolved foundation that no executive adjustment could correct without addressing the original structural gap. In that moment, someone in the room quietly stated what no one had fully committed to saying aloud until now, that Michael Carter needed to be brought back immediately, not as a consultant, not as a witness, but as the only person who had correctly identified the structural flaw before it propagated through every layer of the company's financial architecture. The suggestion did not sound dramatic, it sounded unavoidable. And as Victoria listened to the overlapping alerts still cascading across financial dashboards, legal warnings still compiling in real time, and investor demands growing sharper by the minute, she made a decision that felt less like authority and more like surrender to necessity, authorizing an immediate recall of Michael Carter to the emergency compliance room. While outside the glass walls of the boardroom, the company continued sliding through a crisis that was no longer theoretical, no longer internal, and no longer containable by anything except the very man they had previously removed. The emergency compliance room at Victoria Hale's regional logistics company no longer felt like a boardroom. It felt like a courtroom where every system log, every audit trail, and every delayed transaction was quietly preparing to testify. The crisis had reached its irreversible stage, banking. Representatives were now connected live through a secured channel. Investors were watching a streamed briefing with increasing concern, and legal counsel had shifted from interpretation to exposure mapping, outlining what parts of the company's recent financial activity could still be defended if the missing signature authorization file was not validated in full. When Michael Carter entered the room again, there was no dramatic announcement, no applause, no apology from those who had removed him, only silence that carried memory. He stood there as a white American single dad, former corporate risk officer working as a quiet bookkeeper, not returning for recognition, not returning for authority, but returning because the system he had once warned about had finally reached the point where ignoring it was no longer possible. Beside him, Ethan, his 12-year-old son holding a school backpack and lunchbox, stayed near the edge of the room, watching without understanding every technical detail, but understanding perfectly that the atmosphere had changed from certainty to fear. Victoria Hale did not speak immediately. Neither did Richard Miles. The confidence that once filled the space had been replaced by the uneasy awareness that something fundamental had been misread. Michael placed the missing signature authorization file onto the central table, not forcefully, not theatrically, but with the calm precision of someone placing a final piece into a structure that others had built incorrectly. The room screens synchronized automatically, pulling in the full audit reconstruction, and what appeared was no longer fragmented uncertainty, but a clear chain of validation failure. The file revealed that the loan approval process tied to Richard Miles's financing strategy had bypassed a mandatory compliance signature window, meaning the bank covenant had been activated under conditions that violated internal authorization rules. A second layer of the file exposed transaction logs showing that once the missing signature authorization file was bypassed, downstream payment commitments and vendor obligations were executed under a structurally invalid approval state, creating exposure that could legally reclassify portions of the debt as improperly authorized risk allocation. A third section, pulled from the banking audit feed, confirmed that automated reconciliation systems had flagged the breach early but had been overridden by internal escalation commands tied to executive continuity protocols, effectively silencing the warning signals before escalation thresholds were reached. Victoria leaned forward slightly as she read, her expression shifting from controlled authority to quiet realization, while Richard Miles attempted to interject, but stopped when the banking representative on the live channel confirmed that their internal compliance systems had reached the same conclusion independently. The authorization chain was incomplete at the moment of execution. The simplicity of the truth was what made it devastating. Not hidden complexity, not technical confusion, but a single unresolved signature requirement that invalidated everything built upon it. Michael did not elaborate beyond what was already visible. He did not accuse. He did not defend. He simply allowed the system to speak through its own records. And then, in the stillness that followed, he said clearly, without raising his voice, "Power talks first. Proof talks last." The room goes silent. No one moved for several seconds, not because they did not understand, but because understanding had arrived too completely to be ignored. Investors on the live stream stopped asking questions. Legal counsel stopped typing. Even Richard Miles, who had built his position on interpretation and confidence, found no immediate counterargument that did not collapse under the weight of the logs now displayed across every screen. Victoria finally looked at Michael, not as a dismissed employee, not as an inconvenience, but as the only person in the room whose warning had survived contact with reality without breaking. Outside the glass walls, systems that had been running smoothly for days suddenly recalculated exposure values in real time, reclassifying financial obligations based on the corrected authorization state, while inside, the realization settled fully: the missing signature authorization file had not been an administrative oversight. It had been the structural point where everything had already been decided long before anyone realized they were operating without it. The public correction did not arrive as a dramatic declaration, but as a controlled reversal inside a room that had already seen too many irreversible decisions. Victoria Hale, white female CEO of a regional logistics company, stood before the executive board, investors on secured lines, legal counsel present, and internal audit representatives already aligned with external banking confirmation. And for the first time since the crisis began, she did not defend the system, she corrected it. Her voice was steady, but no longer absolute. She began by acknowledging that the earlier operational conclusion regarding Michael Carter had been based on incomplete interpretation of the authorization chain tied to the missing signature authorization file, and that subsequent external banking verification had confirmed structural invalidation in the approval sequence that triggered the cascade failure. The room did not react immediately because the shift was too large to process in real time. What had once been framed as Michael's obstruction was now being reclassified as early detection of a systemic compliance breach. Victoria continued, stating clearly that financial decisions executed under the compromised approval window would require formal review, and that responsibility for the escalation pathway tied to the risky bank loan would be reassessed under board-supervised audit proceedings. CFO Richard Miles, who had once positioned himself as the stabilizing force during the crisis, now sat with noticeably reduced authority as legal counsel confirmed that the internal override protocols he had relied on did not supersede banking covenant requirements when the missing signature authorization file remained unresolved at execution time. The consequences were no longer theoretical. Board members initiated formal motion for financial governance review, and within the same session, Richard's role was placed under immediate suspension pending full audit examination of his decision chain, including his approval of leveraged exposure that now risked regulatory scrutiny and potential breach of fiduciary duty standards. Across the room, employees watching the internal broadcast began to understand that the narrative had fully inverted. The quiet bookkeeper they had dismissed was not the source of disruption, but the point where the system had first been correctly identified as unstable. Victoria then turned slightly, shifting her attention toward Michael Carter, who stood calmly with the same controlled stillness he had maintained throughout every stage of escalation, not stepping forward to claim victory, not reacting to recognition, but simply present in the way someone is present when truth finally catches up to systems built without it. She stated publicly that his analysis of the missing signature authorization file had been formally validated by independent banking audit confirmation and internal compliance reconstruction, and that corrective governance measures would incorporate his findings as the basis for structural repair moving forward. There was no applause, no celebration, only the sound of systems recalculating authority in real time. Michael accepted the acknowledgement without stepping into it, then spoke once, quietly, setting a boundary that carried more weight than any executive statement in the room. He said he would assist in stabilizing the system only through documented oversight and formal audit channels, and not as part of any informal authority structure that had previously ignored compliance protocol. Victoria nodded, understanding that the correction was not personal redemption but procedural necessity, and that trust in this context had to be rebuilt through structure, not sentiment. Outside the glass walls, financial systems began slowly rebalancing exposures tied to the corrected authorization state, while inside, the company moved into a formal recovery phase that prioritized worker protection, vendor continuity, and banking compliance restoration. Richard Miles was escorted into a separate review process where his decisions would be evaluated against regulatory standards rather than internal assumptions, marking a definitive shift from executive discretion to accountability enforcement. Michael did not stay for recognition beyond what was required for stabilization. Instead, he turned slightly toward Ethan, his 12-year-old son holding a school backpack and lunchbox, and signaled that they would leave together once the necessary protocols were complete, not as escape, but as completion of duty. The system that had once dismissed him now depended on his measured restraint, and as he stepped away from the center of authority, he made it clear without raising his voice that his role would never again exist without structure, documentation, and respect for the boundaries that truth required. The story did not end in applause or celebration, but in quiet normalization. The way systems settle after a structural correction has finally been acknowledged. Michael Carter, white American single dad, former corporate risk officer working as a quiet bookkeeper, stood outside the building where everything had unfolded, not as a man transformed by victory, but as someone returning to the scale of his real life. The noise of boardrooms, audits, investor calls, and compliance cascades had faded into something distant and procedural now, handled by teams and systems that no longer needed his direct presence. Beside him, his 12-year-old son Ethan held a school backpack and lunchbox, shifting his weight slightly, as if the world had become lighter without fully understanding why, only sensing that the tension that once filled every room they entered had finally loosened its grip. Michael held the missing signature authorization file folded carefully in his hand, not as a symbol of control, not as a reminder of conflict, but as documentation, evidence that truth, when left unattended, does not disappear, it waits to be read correctly. He didn't speak about what had been corrected inside the company, because for him it was never about correction in the emotional sense. It was about structure being forced back into alignment with reality. The same systems that once dismissed him had already begun rebuilding themselves around verified compliance logic, adjusting financial pathways, stabilizing vendor relationships, and restoring banking continuity under properly validated authorization chains. Richard Miles's name no longer carried influence in the way it once did. His decisions were now part of a formal review process where documentation mattered more than confidence, and where assumptions were no longer enough to hold authority. Victoria Hale had already moved the organization into recovery mode, not through dominance, but through acknowledgement that control, without correctness, eventually collapses under its own weight. Michael, however, did not participate in any of the language of redemption being spoken about him in internal summaries or executive reflections, because none of it defined what he considered meaningful. What mattered to him was simpler: that the system could now function without hidden gaps, that the missing signature authorization file had been understood for what it truly represented, and that no other employee would be removed or dismissed simply for noticing what others had missed. He adjusted Ethan's backpack strap gently, a small fatherly gesture that carried more certainty than any corporate statement ever could, and together they began walking away from the building not as figures in a recovered narrative, but as a father and son returning to ordinary life. There was no triumph in his expression, only calm acceptance, the kind that comes from knowing the difference between being right and being responsible for what comes after. And as they reached the edge of the street where the city resumed its normal rhythm, Michael paused for a moment, looked at the folded file one last time, and understood that its real purpose was never power or reversal, but clarity, proof that systems fail not when truth is absent, but when it is ignored too long by people who confuse authority with understanding. The final lesson was not about corporations or audits or even consequences. It was about what remains when all of that settles, when a father still walks his child home, and when truth is no longer something that fights to be heard, but something quietly respected because it was finally allowed to speak. And in that quiet, the last moral remained simple and unshakable. Integrity does not win loudly. It survives silently, and it always outlasts the systems that forget to listen.